Before starting the video, click the subscribe button and turn on the notification bell. So today we are gonna discuss about a special journal. In the previous video, we discussed about the journal. So what was that? The journal is a book where all type of transactions like cash and on account and sale or purchase of anything is recorded. But in special journal, you have to record only the sale or purchase of merchandise, and that sale or purchase should be on account as well. If any other asset is being sold or is being purchased, so it will not be recorded in a special journal. It shall be recorded in any other journal pertaining to the transaction, or in general journal it shall be recorded, but special journal is only made for the transactions of sale or purchase of merchandise, and that should be on account. Subsidiary ledgers. These are the ledgers prepared individually for every customer and every supplier, so that the company might have known about how many did a customer or supplier make transactions with the company, and how much are to be received from the customer or how much are to be paid to the supplier. So when the company prepares the individual accounts of each and every supplier and customer, so the company has the record that how much have to be received from the relevant customer, or that how much have to be paid to the relevant supplier. So this is the main purpose of preparing the subsidiary ledger. So what happens next when you prepare the subsidiary ledger and when you balance them? So what is the next step you take? Let us take a look. Control accounts. So control account is an account where all the balances of subsidiary ledger are brought, and a single account maintained of debtors or creditors, same as we do in general ledgers. So as we do in the general ledgers, like debtors account or creditors account or account receivable or payable, so in the same way we prepare control account. So this is the account where all the subsidiary ledgers balances are dumped. So whatever is left over in the subsidiary ledger, it shall be dumped into the control account, and control account is the main account of debtors and creditors. So let us take a look of subsidiary ledger of debtors. Now if we have a customer, Mr. X, so whatever transactions we have made him, we will prepare a subsidiary ledger for the same customer, and we will record all the transactions pertaining to him during the period. So here we have a sale of 100,000 to Mr. X, and then Mr. X returned that sale of 30,000. So the subsidiary ledger balance is 70,000. Now this balance is to be posted into control account. Now debtors control account. Debtors control account is same as debtor account, which we prepare in the general ledger. Now let us take a look on this. We have a customer named Mr. X. So whatever subsidiary ledger we have made for him, the balance of that subsidiary ledger has been brought forward to the debtors control account. And we also have a customer, Mr. Y. So the subsidiary ledger account balance of 40,000 of Mr. Y is brought forward to debtors control account as well. Now the total debtors control account has the balance of 60,000, this 20 and plus this 40, so total balance is 60,000. Subsidiary ledger self-balancing form. Now we have the same customer, Mr. X, and we are about to prepare a self-balancing form subsidiary subsidiary ledger for him. Now here you can see that we have made some sale to Mr. X, and Mr. X has returned some sales to the company, and then again we have made some sale to Mr. X. So when we made the first sale, Mr. X account was debited by 50,000 and the balance was debited by 50,000. Then we have a sale return. So if we have a sale return, so that will be deducted from sales. Now the ledger balance is 40,000. So you have got the idea that it is being balanced transaction by transaction. Then again, sales is made on 30th April for 80,000. Now this 40 plus 80 is 120. So the ledger is being balanced by each and every next transaction. So this is the reason that why it is called the self-balancing form. Sales journal, in other words, we can say debtor's ledger, as prepared in the journal ledger. So how to prepare it? First you have to make the column of date, memo number, name of the customer, and then amount. As you can see that on 20th March, Mr. John is being sold goods of 25,000. Then on 26th March, company sold the goods to Mark 60,000. And on 31st March, Mr. Henry is being sold goods of 70,000. Now the total amount shall be 155,000, and the company shall pass the entry by the total amount, which is account receivable or debtor's account debit by 155,000, and sales account shall be credited by 155,000. Subsidiary ledger self-balancing form of creditors. Now for example, we have a creditor, Mr. A, and the goods purchased from Mr. A are 50,000. Then we made a purchase return to Mr. A 10,000, and then the balance shall be 40,000. 50 minus 10. Then purchased again of 80,000. Now the balance shall be 120,000. Why the purchase is being written on the credit side? It is actually the balance of Mr. A's account, and this is supposed to be a liability. Therefore, the liability is written on credit side. This purchase return, and purchase are just the reasons that why it is being credited and why it is being debited. Creditor's control account. Creditor's control account shall also be prepared in the same way as debtor's control account was prepared. But here, we will record the purchases made from the creditors or suppliers on account. So we have two suppliers, Mr. X and Mr. Y. Therefore, whatever balance is left over in their subsidiary ledger's account, we shall brought forward to the creditor's control account, and then these balances shall make a single balance which will be forwarded to the trial balance. Now, balance to be posted to trial balance is 60,000. Because of this, 20,000 of Mr. X and 40,000 of Mr. Y. Purchase journal. It shall be prepared in the same way as we prepared the sales journal. So, firstly you have to make the column of date, then memo number, then name of supplier, and the amount. Now let us take a look. On 20th March, you purchase something from Mr. John on account. Then 26th March from Mr. Mark 60,000 and 31st March from Mr. Henry rupees 70,000. Now the total amount shall be 155,000 and we'll make the entry by the total amount, which shall be purchase account debit and accounts payable or the creditor's account shall be credit by the total amount of 155,000. Okay, so we are gonna end the lecture here. Hope you have understood all the things regarding a special journal. If you have any query regarding a special journal, you can put your query into the comment section and that shall be answered by the videos. Till then, good luck.